More and more people are starting to realize that what used to be considered non-financial issues, including climate, inclusion and inequality, are issues that do have financial consequences. Today, we cannot think about investments based only on economic returns. Solid investments must comprise environmental, social and governance (ESG) considerations. Investor demand for sustainable investment funds that incorporate ESG factors is expected to grow. According to Bloomberg Intelligence, global ESG assets are on track to exceed $53 trillion by 2025, representing more than a third of the $140.5 trillion in projected total assets under management. Recent geopolitical developments, along with global economic shifts and the rising importance of sustainability, have all made renewable energy projects more and more important within the ESG pillars. Counting from 2016, global infrastructure investment needs to reach $94 trillion by 2040 to keep pace with profound economic and demographic changes across the globe. And here is a quiz question. In your opinion, how much did global investment in energy transition technologies reach in 2022? A. $246 billion, B. $0.7 trillion, C. $1.8 trillion, or D. $1.3 trillion. The right answer is D. Global investment in energy transition technologies in 2022, including energy efficiency, reached a record high of $1.3 trillion. This represents a 19% increase compared to 2021 and a 70% rise compared to 2019, before the pandemic. Now it's time to discuss how ESG standards and guidelines define the work of multilateral development banks and financial institutions, and vice versa. How can these actors be the engines of ESG guidelines standardization? Join us, and let's start. The role of ESG principles and guidelines in the operation of multilateral development banks and financial institutions.
And now, let me call the moderator of the panel discussion, Mr. Gábor Gyura, Sustainable Finance Consultant of the United Nations Environment Programme Finance Initiative. Mr. Gyura is an international expert supporting banks globally to manage their sustainability impacts in line with the UN's principles for responsible banking. Besides his current consultancy role for the UN, he also teaches sustainable finance in the Florence School of Banking and Finance of the European University Institute. He is a member of the Sustainability and Corporate Governance Committee of the Budapest Stock Exchange and also serves on the advisory boards of several sustainability-related international organizations and research projects. Mr. Gyura, it is our pleasure to see you among our moderators. Now the floor is yours.
Good morning. Indeed, I have the honor to moderate the next panel. So yesterday and also today, I think we've already heard about a lot of very interesting and very valuable discussions about economic development, economic growth, sustainability. But let's add ESG to the picture. So ESG is actually to measure sustainability performance, sustainability risks. ESG is a methodology to compare different companies or portfolio of equities. But I have the impression that actually we have almost as many questions as answers about ESG. Well, the good news is that we have really a panel of great experts about the topic. So let me just invite one by one in alphabetical order our panelists. So first of all, we have Mr. Benjamin Cashore, who holds the Lee Ka-shing Chair in Public Management at the Lee Kuan Yew School of Public Policy at the National University of Singapore, and is director of the school's Institute for Environment and Sustainability. Mr. Kashor specializes in global and multi-level environmental governance, comparative public policy, transnational business regulation, and corporate environmental social governance innovations. Mr. Kashor, I would like to invite you to the floor. We also have Mr. Rakwon Chong with us, who is board director of the Ban Ki-moon Foundation for a Better Future, and also the lead author of the Intergovernmental Panel on Climate Change, or IPCC in short, special report on technology transfer, for which he received a personal copy of the Nobel Peace Prize in 2007. Professor Chong has pioneered the concept of green growth since 2005 as a new paradigm to present climate change as an opportunity for economic growth and job creation. Mr. Chong, thank you for accepting our invitation. We'll also have Mr. Andrew Cross, who is the Chief Financial Officer of the Asian Infrastructure Investment Bank. His primary responsibility is to provide strategic and technical leadership in financial and treasury management to ensure the AIIB's sustainable financial strengths and steady growth of financial resources. Prior to his appointment at the AIIB, Mr. Cross was the Deputy Treasurer at the International Finance Corporation, a member of the World Bank Group. Thank you, Mr. Cross, to be with us today. Last but certainly not least, we also have Mr. Sufeng Zhu, who is a professor and dean at the School of Public Policy and Management and executive director of the Institute for Sustainable Development Goals at the Tsinghua University. Mr. Zhu has won many national academic awards, including the China National Science Fund for Distinguished Young Scholars of China, and was nominated and appointed as a member of the Committee for Development Policy of the UN. Mr. Zhu, thank you also for accepting our invitation to be with us today. So I have a lot of questions for all of you. I do hope we will have enough time for everything. And I would like to start with some joint questions for all of you, and then I would like to zoom on some of your professional activities, a little bit directly linked to your daily, let's say, issues about ESG. So I've already mentioned in my introduction that actually everybody's talking about ESG. ESG sounds like a very promising new concept, but I also have the impression that people might not necessarily understand the same things when they are talking about ESG. So let's maybe start with the definition. I would like to hear from all of you how you define ESG, what do you think are the objectives of ESG standards, and what does ESG really mean both in theory and in practice. We can go in any particular order. Would any of you would like to start?
Sure, thank you. First of all, let me say that it's wonderful to be here and to be part of such an innovative conference. And the fact that a central bank is organizing this kind of workshop and conversation, I think, is really telling about what's happening, not just in Hungary and Singapore, but across Asia, Europe, and the world. So very grateful to be here. I was reflecting on this question because one thing about me is I work on contemporary environmental policy innovations. However, I'm getting older, and as a result, I'm now a historian as well, just by default. And what I've noticed actually when delving into this ESG concept is that it actually is not new. The acronym is new, ESG, but we've had many iterations of this approach over the last 25, 30 years. Examples include other acronyms, corporate social responsibility. Remember CSR? Non-state market-driven global governance that I helped create a research community around. Private governance has now emerged. Standardization has emerged, has been around for a while as well. So which one is it? I think the answer is quite clear. Ever since Brundtland, three-legged stool, we realize that we have to integrate a bunch of different questions around how do we govern this planet. At the same time, recognizing that some problems are getting so acute, they need special attention. I think what's interesting about ESG is that even though it's broad, sustainability in general is broad, and along with the SDGs, very broad, we're also getting quite narrow. We're looking at 1.52 degrees, net zero peak emissions. These are very narrow focused topics, and it seems to me that's where the new part is around this, is that we're not just talking abstract concepts anymore, things we all believe in, but actual results we need on the ground. And to me, if we can leverage that kind of thinking about ESG, not just being abstract and lots of taxonomies that include everything, but actually get targeted around real-world impacts, I think we got a chance to make a difference in this world.
So Ben and I have been debating over the last couple of days, and so we've decided to try and motivate the audience, and I don't know if we'll achieve inspiration, but at least try and goad you into some action. So I think my role on the panel, being a member of the executive team at the Asian Infrastructure Investment Bank, so a multilateral development bank, is I think I'm not the token practitioner, but I am the practitioner. So the bank it'll do about 45 projects this year, and every year we do more. We've done 234 infrastructure projects since being established in 2017. So I live and breathe the implementation of ESG or CSR or whatever is your favorite acronym every day, because I sit on the investment committee. So our investment committee has 3 stages: concept, a screening, a concept, a final, and an initial and a final. So for us, ESG is the implementation of the bank's environmental and social framework to every single project that we do. So in essence, if you think about it, 2 things have to be achieved. The project has to be financially sustainable, so concepts of IRR, MPVs, return on equity, return on capital employed, risk-adjusted returns, all the metrics that many in the bank in the audience will be familiar with. And then, most importantly, it's the developmental goals that the institution has. So think about our contribution to climate change. But running through that is, if the project doesn't pass the environmental and social framework, if it doesn't pass the test, the bank doesn't go ahead and do it. So for me, it's very real. It's in every project we do. It's in every project we've done. It's in every project that we're going to do.
Thank you. I want to pick up one of certain elements what you already shared, but maybe let's finish first the first round. Yes?
Yeah. Thank you. Thank you for having me, and this is a wonderful forum. In terms of the objective of ESG, the objective of the SDG standard is to help experts, to external stakeholders and investors to evaluate their investment behaviors and the performance of enterprises, improving sustainable development and fulfilling social responsibilities. But maybe by definition, I think we should classify the 2 concepts within this ESG standard. One is the ESG standard, some sort of ESG standard. Another one is ESG instrument. There are different things. ESG standard means there are different weight and there are different criteria for evaluate the performance of enterprises. But I want to emphasize the ESG instrument, including like ranking, rating, and also accreditation. So there are different instruments we use to encourage and motivate the enterprises to follow these rules to make their better behaviors. For example, ranking. Ranking, we can see everybody very interested in seeing who is in the top, who is at the second, but maybe there are a lot of hidden information behind this rating system. So the top enterprises may attract more attention by the society, but maybe top 100 is okay, but also we will ignore them. But for rating is better because the performance of the enterprises, they may pay more attention to themselves' performance. So investors can pay attention to their own benefit and investment. But for accreditation, I personally recommend this instrument because there are not like objective evaluation by the third-party research institute, but by invitation. So that some expert can be invited to evaluate these individual enterprises. So they can diagnose like a very in-detailed and in-depth investigation to these enterprises. Therefore, maybe this performance can be in-depth evaluated, and then we can give the certificates to them. So maybe this is another kind of instrument we can emphasize. Thank you.
Thank you. I hope we can get back also to rankings and ratings later. But before that, let me turn to Professor Chung.
Yeah. First of all, I'd like to join the Benjamin that to reiterate the unique role Central Bank of Hungary is playing. Is very impressive, and I really applaud this noble initiative. The central bank is playing this kind of role. I think I don't find it any other word. So I don't see it in Korea, and I don't see it in many other countries. So this is a very unique role, and I really appreciate this kind of initiative. And my background is also, I have started this kind of business, sustainable development business from '91. So I'm also becoming a kind of a historian, and ESG sounds like a lot of deja vu, and we have passed so many phases. But now from my background, I'm not a banker, I'm not a businessman, but I've been working in the UN, and from an academic point of view, what I was promoting how to transform the vicious cycle between economy, environment, and society, because we are struggling. We are stuck in the very vicious cycle. How can we get out of this bad cycle towards a good cycle where economy, environment, society can support each other and generate win-win solutions? That has been my big question for quite some time. And I've been proposing the idea of green growth because I was so much frustrated as a negotiator for climate change and also policymaker that so many people are so much convinced that climate change, clean energy is a cost and the burden and pain. So I've been so much frustrated about this fixed perception. So I believe that unless we change this negative perception, so which is like a burden sharing to be an opportunity sharing, then I don't think we can have any chance of solving the problem. This is why I came up with an idea of a green economic growth. So green growth, I initiated in 2005. Now OECD now have Green Growth Initiative and the Green Growth Knowledge Partnership, and many other institutions are now grasping the idea of green growth. I'm very glad about that. But the main focus is how can we turn this climate challenge into green economic growth depends on, number one, we have to shift from quantity competition towards quality competition, like for GDP. So GDP is a quantity. So we have to move towards a quality. But at the moment, what you are doing now in the free market system, we are racing to the bottom for the cheapest price. The winner is the cheapest price. So under these circumstances, like this free market system, it's very difficult to get out of this race to the bottom. And we cannot move towards transition towards a quality for a long-term sustainability. So this is ESG, to me, is an attempt to turn this quantity cheapest price competition towards a quality competition for a long-term quality. So it's from short-term to long-term and the quantity to quality. So ESG is a kind of one of the tools to turn this around This is my interpretation of ESG in a conceptually. And the second is also it is a very important tool to turn this bad cycle towards a win-win good cycle. So ESG can be one driver transforming this bad cycle to be a good cycle. And my third interpretation of the relevance of ESG with the multilateralism or multilateral cooperation is we cannot succeed in ESG unless all countries have a certain consensus about the level of standards. Because if some countries, for example, if country A introduces carbon pricing and charging fossil fuel taxes on fossil fuel, but country B is not doing it, and then we cannot have a fair competition. And the good guy who are introducing, internalizing carbon price is losing the battle. So this is why the ESG is an attempt to to provide a level playing field for all the players. So this is the relevance with the multilateral cooperation. Without multilateral consensus of a certain standard, and of course it has to be very equally, fairly implemented and enforced. Otherwise, it doesn't mean anything because there are free riders and this kind of thing. So the multilateral cooperation and ESG has a very important relevance. I think one cannot go without the other. So multilateral consensus plus ESG standard has to go hand in hand together. Otherwise, we cannot turn this bad cycle. We cannot get out of this bad cycle. So we have to go into the moving towards a good cycle, the quality of long-term sustainability. But this is a concept. But practice is another issue. I'm not a practitioner about this, but I know that the ESG is still undergoing a lot of difficulty in actually delivering the results. So there are a lot of room to improve. So I believe I stop here and we can talk about how can we improve on it.
Yeah, and actually my personal impression is that your thoughts and ideas about green growth are probably followed by a growing number of stakeholders. I have a South Korean banker, a friend of mine, and whenever I talk with him, he keeps saying, well, we should always talk about opportunities, not just about all the risks with climate change, all the negative consequences, but also the business opportunities, because that's the way we can also convince also market players to put more effort into this challenge. Actually, we'll be talking about, of course, multilateral development banks, other financial institutions, ESG standards, but I would still spend some time on individuals because, of course, in any economy, what individuals, actors do matters a lot. And with ESG, of course, we also have the hope that basically a growing number of individual investors, be them retail investors or institutional investors, will take into consideration more and more ethical or sustainability issues in their daily investment decisions. And that will also bring us to the question of personal responsibility. And again, I would like to stay with you, Professor Chong, with your thoughts about personally determined contribution. I think all of us heard about nationally determined contributions, or NDCs, which are like the backbones of the Paris Climate Agreement. But you, Professor Chong, have this very interesting novel idea about personally determined contribution. I think all of us are really excited to hear what it is. What are these personally determined contributions?
Okay, thank you very much for the question. Actually, even the success of ESG will depend on how much the consumers appreciate the ESG rating of the company or institutions. Because if the appreciation of the consumers is not very strong, the appetite or incentive for the businesses to invest for ESG might not be that strong. So while the ESG is focusing on the business sector, but often in our debate, discourse of a climate regime, I've felt that during the last 3 decades, we have not talked much about the responsibility and the role of the consumers. How can they make a contribution? How can they share the responsibility of the government and the businesses? I'm not denying that government and business has a responsibility. My point is simply just pressing the responsibility of government. We have been doing it last 3 decades. For example, removing the fossil fuel subsidy. We have been pressing that kind of argument for a long time. But how much fossil subsidy has been removed? Yeah, there's a reason why it's so difficult. Because climate change is not the only job of the government. Government has a different job as well. This is why fossil fuel subsidy is very difficult to remove. So what I'm saying is, just emphasizing the responsibility of government has a certain limit, certain political limit and the social limits, achieving the results. And also just pushing the responsibility of businesses, accusing business for the bad behavior. Of course, it's necessary, it stimulates. But that also has a certain limit. And then, what can be a fundamental transformer? Well, what can be the fundamental driver of this transition? And my conclusion is that it could be ultimately should come from the buyer. Buyer has the power, buying power. Who is the buyer? Is the consumer. The consumer has to make a right choice. They have to differentiate different products, and they should appreciate higher sustainability quality. If the consumers do not appreciate it, I know that there is some skepticism about consumer campaign, but recently, I'd like to have a very interesting discussion with Benjamin last night, but what I'm observing recently, there is a very different resurgence of groundswell of sensitivity and the willingness and the volunteership to contribute and share the responsibility for CO2 carbon reduction by the young generation especially. They are getting more and more sensitive about carbon emission and climate change issues. So I call this as a climate-sensitive consumers, not just green consumers. These climate-sensitive consumers are becoming, to me, is quite a considerable group that can exercise a lot of power and influence. And also, for me, ESG should not be perceived just as a burden for the companies. Because since there are so many young generation especially are so sensitive about carbon reduction and carbon-free products, so it will be a huge business opportunity for the companies when they provide carbon-free product with renewable energy. They claim that my product is carbon-free product. I had an interesting discussion with Coca-Cola. They said they are 100% willing to buy renewable energy because they can claim my Coke is carbon-free, and that they believe it will be a very strong marketing tool. So not because of green just a contribution for the earth, but it's a big marketing opportunity. So in order to activate this kind of climate marketing activities, I think then the people, individuals, has to have a sense of personally determined contribution. Because to me, NDC can be very hollow in many sense. Because it's set by the government, but many people don't even remember how much is the number. Is ordinary Hungarians remember what is the Hungarian NDC? So this is set by the government, certain politicians at certain convenience, political convenience. So the NDC is a sum of PDC. That's my interpretation. Without PDC, how can we have NDC? So we have to promote the concept of a personally determined contribution spread out. I think it depends on the volunteerism. I'm not imposing it. I'm proposing it to be a voluntary campaign. So Me First campaign, and also in order to actually realize this kind of Me First personal determined contribution, we need a price differentiation of the product so that consumers can make a choice for a better quality of the product. I'll stop here. Thank you.
Thank you. We could have a nice quiz question about the Hungarian or EU NDC. I would also be really excited to see how many of us would guess the numbers. But I think now the concept of personally determined contributions are really clear. And let's a little bit pick up this thread. You've already mentioned one famous Coke producer, which happens to have a great ESG rating. But how much trust can we give to ESG ratings? So I would like to turn to you, Professor Zhu. You've been studying ESG ratings. You already raised the questions about ESG rating, ESG rankings in your introductory thoughts. So my question is how you are seeing basically the evolution of ESG evaluation standards, and especially how comparable these ESG standards are, especially across jurisdictions. What are your thoughts on that?
Thank you. I have worked on research on the ESG rating system of local government in China with my research team since 2020. And by introducing the new perspective of building the ESG rating system of Chinese local government. And we evaluate the local government ESG performance to promote the local sustainability and investment. And the third report will be released in early next month. And also ESG disclosure becomes one of the significant factors to build and improve ESG evaluation standard system. For example, the new standard for sustainable disclosure issued by ISSB is an important milestone for the construction of global benchmarking standard for the sustainability disclosure. So as you mentioned that there are different maybe ESG standards, and due to the differences of focuses in various ESG standards, the comparability between the standards become a very important issue. So, but my opinion is we shouldn't pay too much attention to the diversity of the ESG standards and the unification of the standards. The priorities and the preference of the investors are different. There are different priorities and preference. So the ESG standard used by different investors should be different. I can see like some big negative impacts on the diversified ESG standards, as long as the standard can meet the demand of stakeholders and provide remarkable references of their investment decision. So I also mentioned above, like no matter which standard you use, and no matter using a unified SDG ESG standard and a diversified ESG standard, the most effective factor is to motivate the enterprises to perform ESG. So that's not the responsibility of the standard, but also for the instrument, so like rating, and accreditation. So what and how the ESG instrument will be selected to put into practice. So that's, I think, should be pay attention to. Thank you.
Thank you. And actually, I wanted to add that in the EU, we are about to regulate not just ESG standards, but also ESG rating agencies. And actually, I think all these thoughts coming from research are so important that basically we incorporate in the upcoming regulation of ESG rating agencies. And when I'm talking about regulation, this also brings us to governance. And here I would like to turn to you, Mr. Kashor. You're studying and researching a lot governance itself. And when we talk about ESG, we tend to talk a lot about environmental factors, about social sustainability, but less so about governance. So my question is, how do you see the role of ESG in actually driving innovation in governance? We can talk about MDBs, financial institutions, or corporations, but even governments.
We do not have enough time. So I'll do my best to give some highlights. So I want to, as the historian Ben Kashor, bring us back to 1993, when standardization really took off through the marketplace. And the idea was that by generating global standards governing forestry, palm oil, climate, whatever it was, we could help investors make more green choices and help consumers be part of that story. And definitely we've made major progress in developing standards according to what we now call ESG. And we've had really good stakeholder dialogues, and we've really improved the legitimacy of the systems out there. Really wonderful impacts have occurred. However, there's an elephant in the room, which is that when you think about all these efforts that have been deployed in the name of finance and market-driven mechanisms over the last 30 years, remember the Equator Principles? Remember REDD+? That's reduced emissions from deforestation and degradation for financing. And of course, we have the Green Climate Fund. I was just there a few weeks ago. They're puzzling through these challenges, how to best be effective. We have green bonds. All these efforts that are taking place. Overall, the major crises, including climate, are getting worse. Okay, so we have this paradox between attention to problems and the acceleration of some. Now, of course, there's been great advances in things like poverty alleviation, fantastic, but we're seeing this tension on some of the ones we care about the most. So when it comes to governance, the question is, how do we think about standards? Are we going to have standards that are so wide-ranging, we're going to have broad taxonomies, that it's going to be hard to even know what we mean by saying ESG certified? Or are we going to get more targeted and say, look, we've got comparative objectives that the world has now agreed to, 1.52 degrees, net zero, peak emissions. And what about targeting our efforts more to get effective results? Might be one way to get around this governance challenge. Let me just say one last thing. In our research, we found the following dynamic, which is that the higher the standards you have governing a sector, be it forestry, climate, whatever, overall, the lower support you'll get, okay? High standards, low support, low impact, initially, when the program first begins. Or you'll get low standards, high support, and low impact. So the real question is, how do you actually move from this initial stage with low impact to evolve in multiple steps to achieve high support, high standards, and high impact? And to me, that's a question about then how we think about policy design. And if we had more time, we could talk more about that. But to me, designing policies for durability and effectiveness is really important. One last thought. Remember the Chicago Climate Exchange? That was meant to be this really cutting-edge effort that Al Gore helped lead. Millions were spent on it. Financing was spent on it. It died. Okay? It doesn't exist anymore. So it behooves us not just to build, but to design for the long term. And we have techniques and efforts that can do that.
And actually, governance is also extremely important for multilateral development banks. And here I would like to turn to you, Mr. Cross. Actually, of course, the Asian Infrastructure Investment Bank is a player which has great significance going beyond its own investments in non-financial let's say activities, because it could also be like a model for also other actors in the region. You already talked a little about how you approach ESG in the bank, but can you a little bit talk about what are the key trends that are shaping EIB's investments in the Asia Pacific? How you incorporate ESG in practice? Maybe if you can also tell us some examples about sectors. We've already talked about technology today. Can you a little bit explain how things work in practice?
No, look, thank you. In my enthusiasm to give the audience value, I didn't rightly give credit to the Hungarian Central Bank for one, holding this forum, and two, for the kind invitation to participate. And I feel an obligation to give you value, especially as we've only got 10 minutes left. So I want to deal in specifics. I remember coming into the industry and somebody saying to me, you don't get paid for effort, you get paid for results. And something to really worth bearing in mind. And also, I remember somebody saying to me that a conversation without action was just noise. And so when you're listening to this panel, you should really be evaluating what value have we given to you for the time that you're investing in this. So if I think about AIB, Hungary as a shareholder, we were given $100 billion in 2017. Since then, we've done 234 projects. But if I pick up some of the themes of the panel, we have 3 AAA ratings, S&P, Moody's, and Fitch. Within each of those 3 AAA ratings, there is an ESG component. Each one labels it differently. We receive 3 unsolicited ratings from 3 separate ESG ratings criteria. And although we score AAA ratings on credit terms, we're in the pack amongst other MDBs around E&S and governance. And those are unsolicited ratings with different methodologies and different criteria. Then if I think about standards, I did my first green bond along with a team at IFC in 2008. So it's literally one of the first. And that was a $200 million green bond. It was hard work. I mean, it was really difficult to make a case, a compelling case to CSR investors around buying a green bond. Now the green bond market is a $1 trillion market. AIB issued a $2 billion essentially green bond the other day. We received $4.8 billion of orders. It's now well established. It's a mainstream market. Concepts of greenwashing are just a reflection of maturing of the debate. If I think about standards, we're now trying to think about how do we apply ISB, so the essentially reporting standards that are coming out of the IFRS. That's replacing TCFD. We're also in a dialogue with UNPRI. We've had NAFME standards in China. You've got the EU taxonomy. I don't know, selfishly, I need another standard. I'm already struggling to report against many different perspectives on exactly what is ESG. Challenges for the future, where's the focus of the bank? If I look at Asia, in 2000, Asia was emitting a third of greenhouse gases. Now it's emitting 50% of greenhouse gases. Roughly 87% of people affected by natural disasters are in Asia. But it's also a really interesting concept. What is a natural disaster these days? Actually, if you look at the science, most natural disasters probably are climate disasters, which means inherently they're now man-made disasters, which also then perspective becomes really important. How does that impact an infrastructure bank? So as I said, we've done 234 projects, $45 billion we've put to work. What are we now having to plan for when we build a road? Well, we're probably getting a 1 in 100 year storm every 30 years. The inflation cost of infrastructure has surged. But also in the region, one of the things you have to think about is debt sustainability. Across the whole planet, debt levels are pretty much every borrower are at, in absolute terms, historical highs. Now in a rising interest rate environment, one of the early panels talked about US interest rates. How do you fund necessary climate change? And remember also, we also talk about adaptation and mitigation. There are clear areas of Asia which are much, much more around adaptation than they are mitigation. Think about the Pacific. Right? Think about how much do the Pacific, small islands, which are really feeling the impact of climate change in terms of seeing atolls wash away, and where does that population go? So climate change is very immediate for the bank. There's an urgent patience about it, meaning it's an issue we all have to be committed to, but we have to tackle it urgently. Last point I'd give, because I'm conscious of the time, is the bank doesn't finance coal. My two largest shareholders, China and India, are some of the largest greenhouse gas emitters. So geopolitics is something which multilateral banks deal with every single day and have been dealing with every single day since multilateralism was set up in 1944. So it's not a new phenomenon for us as an institution. That is a rush through many topics, but I'm very conscious of trying to give the audience value and stoke your interest in interrogating all the panelists after the panel.
Since we are running out of time, I'd like to suggest several points that the Central Bank of Hungary might find it interesting and I hope, could take some lead in bringing new initiatives, because as we already feeling a lot of deadlock in our efforts for pushing our climate agenda. Number one, we have to get out of the negative discourse between carbon emission reduction and mitigation and economic growth issue. So because it has been mainly based on cost-benefit analysis and always coming of CGE modeling, they always projecting that CO2 emission, 20% of CO2 emission reduction will incur 0.2% GDP reduction. This is always a standardized discourse, prevailing the current, our mentality. But we have to get out of this cost-benefit analysis, and we have to move towards clean energy investment multiplier effect. Why don't we think about investment multiplier effect? Clean energy investment can generate jobs and economic growth and sales. So we have to see the other way around. This is number one. Number two, at the moment, our discourse or data for emission is based on production. This is why GDP. So we're calculating emission based on GDP. So China is blamed for all their GDP. Actually, much of them are exported to Europe and the United States. The consumers are in Europe and the United States. But China is responsible for the whole GDP production. Actual consumption is much less, more than 10% less. So China actually should be 10% less responsible. But Europe, in many countries in Europe, importing almost half of their consumption from overseas. But they are only reporting only half of their consumption as their emission. Typically, Sweden and the UK, less than 40% and 6%. So anyway, so we have to change our data based on production to consumption, so that now we have carbon leakages happening. From carbon leakage from Europe to China and Korea, and China and Korea is blamed as a climate rascal. But this is a wrong frame. We have to calculate from the consumption. Unless we don't cut net consumption, we cannot have a net global reduction. We have to have a net reduction. So sustainable consumption has to be on the agenda for global climate regime in Dubai. But for 30 years, we have never discussed sustainable consumption pattern in our climate discourse. COP has never taken up this issue. So this is the second point. And the third point is a price differentiation for energy. For example, in Korea, our Korean power company is running huge deficit. This is why Korean power company is reluctant to increase buying the renewable energy, because they have to pay 20 cents to the producer of solar energy, and that they're selling at 10 cents. So it's a crazy business for them. So why they have to increase it? So my suggestion, why don't you introduce, not only in Korea, in many countries, that renewable energy should be 10 cents as it is. And there should be some companies like Coca-Cola, Samsung, Apple, Google, those big companies are willing to buy whatever the price. Even Samsung in Korea, they are willing to buy whatever the price. They want to buy the renewable energy. But there's no way they can buy the renewable energy in Korea because price is fixed. So this is price differentiation is another option we can think about. And then lastly, as an opportunity for how to make this ESG a very important tool, I have been visiting Russia and Uzbekistan and Kazakhstan. I've been meeting with so many students. I'm giving lectures to them. I'm so surprised and impressed. Even the young student in Moscow, they are very much willing to make their own personal determined contribution. They are willing to pay higher price for renewable energy because young generation are concerned about their future. So my point is, these kind of climate sensitive and concerned consumers are increasing everywhere. Greta Thunberg is one, and symbolizing it. So we have to take advantage of this groundswell of change that consumers are having a huge, very high climate sensitivity. So it can be a very good marketing opportunity and ESG opportunity. So we have to come up with more, take advantage of opportunity rather than shying away, looking at it as a burden. So we have to change our perspective to be a positive. So this is what I'm suggesting. Thank you.
Thank you very much. And actually, these are really interesting thoughts. I really would recommend my audience to catch our panelists in the lunch breaks to really follow up on this thought. Unfortunately, our time is up. I would like to give one very final opportunity to all the other speakers for just any final thoughts. And maybe let's have the question as looking forward to the next decade, what do you think will be the biggest challenges, questions? This can be even a research question about ESG. What are your final thoughts on that? And maybe let's go in this order.
Just briefly, because we're out of time, the historian in me, says, okay, if we look back at all the efforts the last 25, 30 years, lots of well-intended efforts on consumerism, finance, and markets, lots of good examples, but we're not where we want to. So what happens is we end up creating new efforts every 3 or 4 years when the previous ones didn't quite work. And we repeat a cycle we call the policy creation euphoria, implementation depression cycle of global sustainability governance. So for me, the question for all of us here is how do we reverse that cycle and create the policy lock-ins capable of producing these pathways, these durable pathways, these transitions to make a difference on the critical problems we face. And to me, that means generating knowledge around all of our capabilities. Each one of us is doing things that are necessary, but insufficient. And it's our collective way to generate policy mixes that can unleash these positive ways forward.
So, I'm a practitioner. I have to turn up every day and do this. So, I don't have time for platitudes, right? I don't have time for noise. I have to do it. 520 employees working for AIB turn up every day and have to do it. It's hard, but it's the right thing to do. I don't have time for platitudes. My world is all about metrics and results and delivery. So my argument would be, let's focus on implementation, because the real magic is actually in the doing, is in the implementation, not necessarily another taxonomy, another policy, another guidance paper, another white paper. It's actually the doing. So that would be my plea, and that would be my urge to you when you think about it and you engage with us. Evaluate it based on what's the specific, what's the action, what's the deliverable, how do you measure it?
Today we are talking about ESG. ESG is the micro level of the sustainable development at a firm level. But in terms of the 10 years future, I think we have to achieve the global level, the United Nations Sustainable Development Goals in 2030. Currently, we are in the middle of the 2030 agenda, but we have a lot of problems. So ESG standards promote our micro-level performance of the enterprises and integrate all these firms' activities and investment. We hope in 10 years, by 2030, we can achieve the UN SDG. Thank you.
One last word. In one sentence, what we need to do is we have to expand our time horizon from short-term to long-term. We have been too much focused on short-term. We are obsessed about it. And we have to expand it to be a long-term. So climate will be a cost if it is a short-term time horizon. But if you take a long-term time horizon, any spending for climate will be an investment for our future. So it all depends on whether we take a short-term view or take a long-term view. So I once again applaud the initiative of Hungarian Bank, Central Bank, for pushing long-term sustainability perspective. So this is critical. We have to take a long-term view. That is critical to me.
Thank you very much for all your thoughts in the panel. I didn't mention, but the Hungarian parliament is now negotiating a so-called ESG law. So a lot will happen in Hungary in the ESG sphere. And I'm sure we will have a lot to learn from Asia and hopefully a lot of opportunities for cooperation with Asia. But I think we definitely learned a lot from you in the panel today. And I really hope you will stay with us for the lunch break to carry on the conversation. Thank you very much also for the audience for your attention.
Mr. Gyura, thank you very much for the outstanding moderation and for making the panel discussion an interesting and informative session for all attendees. Now that we have closed the multilateral cooperation session, we are going to have a lunch break. For our guests who are here with us at the venue, we hope that you will enjoy the lunch and that you will have the chance to further discuss these interesting topics. Thank you and see you soon.